In this video, I'm going to cover the whole entire market in terms of Dow Jones, NASDAQ, and S&P 500, including the economic calendar, plus investor sentiment, and along with the technical breakdown. Now, if you want to watch the full detailed video, click the link down below. In terms of investor sentiment, the bullish sentiment has increased slightly, but is still lower than historical average. The bearish sentiment has decreased, but still higher than the historical average. So overall, the investor sentiment is more on the bearish side, indicating potential further downside to what their expectations are. Now, in terms of economic calendar, for the week of March 24th, the biggest heavy hitters to look out for is for Thursday, March 27th. Initial jobless claims numbers expected previously was at 223,000. This time around, expecting 226. And then the GDP second revision for Q4. And most importantly, for Friday, March 28th, PCE inflation numbers come out at 8:30 a.m. Be on the lookout for that. For the most part, they're expecting no change except a slight increase for the core PCE year over year. Previously, it was 2.6. This time around, they're expecting 2.7. Even though the Fed regards these as PCE inflation numbers as more accurate versus the CPI and PPI inflation numbers, previous data points for CPI and PPI inflation numbers came in lower than expected for in terms of inflation. So that could still happen around this time around, regardless of the expectations, but we'll have to wait and see. In terms of breakdown, if we're looking at S&P, NASDAQ, and Dow Jones, if you look at the one-year chart for the MACD line, all three have crossed over to the bullish movement. If you look at it, indicates if we're in bearish or bullish, cross over to the bullish side. For the NASDAQ as well, bullish side, and the Dow Jones bullish side. Are we heading up higher? Debatable, because if you look at the 5-year chart, it is in the bearish movement, but the latest data points have come in more on the buy side. And we're at the 50-day moving average for the S&P. For the NASDAQ, we are slightly lower than the 50-day moving average, but the data has come in more on the buy side as well. And then for the Dow Jones side, we're at the 50-day moving average as well for the 5-year chart. Technically, what could be happening is right now, it could be at the side point where we're mid-zone, just like we've seen dating back in December of 2024, leading up to February of 2025. We were in the mid-zone, and we've basically went down far enough and then started going back up, and then now we can see lighter shades of red. Hopefully that is the case, but at the same time, be cautious, because if we're looking at the all charts for all of them, the S&P right about here, MACD line is indicating potential drop to the bearish sentiment. Even though we're in the bullish movement, even though we're in the bullish movement, we could be dropping down to a bearish movement, but it could be short-lived like we saw back in October of 2023, where we were heading down lower, but nonetheless reversed back up to the upside to continuation on the bullish run. So the bullish run does not have to end, and the same thing for NASDAQ right about here, about to drop down. We've seen it come down, but a little bit lower than before too, but we could see a continuation of bullish run potentially overall, and the Dow Jones, same thing crossing over. So be cautious.